Hey traders, this is Blake Morrow with Traders Summit, and with me for the very first time is Larry Tantarelli. He's the publisher of the Blue Chip Daily Trend Report. How are you, Larry?
Blake, I'm doing great. Thank you for having me on. How are you today?
I'm doing great. You know, we're just a few days away from the Christmas holiday. I celebrate Christmas over here, but I know it doesn't matter what holiday people are celebrating. They're probably looking forward to having a few days away from the market and, you know, to peel away. I'm sure you are too.
Oh, sure. Yeah, I'm looking. I'll tell you, after this last few weeks and this double dose of news that we got over the weekend, I'm ready for some time off.
Yeah, I'm sure most market participants are, but you know, it's interesting, and I want to hear all about what you do at the Blue Chip Daily Trend Report. I want to hear all about it here in a second, but the fact of the matter is the stock market, I mean, we're just a couple % off of all-time highs. So I'm going to ask you your opinion about the markets after you tell us a little bit about what you do over there at your company.
Sure, I appreciate that. So what I do, I'm a full-time trader, and I'm the editor and publisher of the Blue Chip Daily Trend Report, and it's a daily newsletter website. It's a subscription-based website, and what I do is I focus on intermediate to longer-term trends in large cap stocks and the major indices. So S&P 500, Nasdaq 100. I really focus on 8 of the 11 S&P sectors, but really my sweet spot is the big institutional liquid large caps, whether it's Apple, Pfizer, Micron Technology, Chevron, Bank of America, things like that. And I've got an intermediate to a longer term time frame. So basically what I'm looking for positions that I believe that within 3 to 6 months, I can get 25 to 35% or so. And then 6 to 12 months, I'm looking for 50% or higher.
Interesting. Okay, so let me ask you this. I mean, we've been in a raging. You've been in the markets for quite some time. We've talked off camera. We've been in a raging bull market for the last dozen or so years. I'm assuming you're predominantly long only to achieve those types of results, but are you at a point where you're starting to worry about where the market's at, where we've been, how quickly we got to where we're at? Are those things factoring into what you're doing in the markets right now?
Yes. So I am more cautious. I've got a little bit over 30% cash right now, which is much more defensive for me. I normally run about 5 to 10% cash. I don't short unless the entire market goes into a longer term downtrend. So in 2018, Q4, I was heavy short triple Q. I did not short anything in March 2020 because it moved so fast. I was just focused on really getting out of the way. But okay. So I trade in line with the predominant market trend. So right now with the S&P and the Nasdaq in longer term uptrends, I'm focused on the long side. But if for some reason we went into a protracted downtrend, a longer term bear market, then I would start to look at some short positions.
So that poses a great question, Larry. So what constitutes a bearish trend for you? Is it, oh, you know, we've seen 10% decline in the major indices? Are you seeing higher or lower highs, lower lows? Are there certain proprietary indicators that you look at that really signal to you, hey, we've turned the corner here? What exactly do you look at that says, hey, you know, I got to start looking lower, not higher anymore?
Right. So the key thing that I focus on is the price trend. So for my time frame, and I'm looking at the daily charts and the weekly charts, but as long as I see gradually higher highs, higher lows, and rising longer term moving averages, then I'm going to lean to the long side. But if we started to see, let's say the market start to roll over, or some of the leading stocks start to roll over and see a series of lower highs, lower lows, if the 50-day moving averages started to turn down, things like that would signal to me to A, get more defensive, and then B, start to look on the short side if the market started to break the 200-day.
Okay, that's interesting to hear. Now, when you say you deal with most of the large caps, hence the name of your company, you know, the Blue Chip Daily, you're dealing with a lot of bigger names. Yeah. How have you felt about some of the biggest names really driving the broad markets and you're seeing some of the underperformance of, let's say, the Russell 2000 and some of the other indexes, has that influenced the way that you've approached the market in recent, let's just call it the last several months?
Not as much, and I'll tell you why. I don't subscribe to the theory, and I see the narrow breadth theory that's out there. But when I look at the S&P advanced decline line, which I think over the weekend, it was maybe 0.5% or 1% off the all-time highs. 10 of 11 S&P sectors were within 5% of their all-time highs. Now, where I do see a much bigger divergence is in the Nasdaq. But when I look at the S&P, especially with the advanced decline line, equal weight S&P, which is RSP, near the highs. So I see a lot of breadth. There's a lot of breadth in REITs, consumer staples. Now, granted, those are more defensive. Energy stocks have recently been near the highs. Banks, the mega cap techs. There's a lot of weakness in the Nasdaq. There's a lot of weakness in what I consider the second tier stocks. You know, maybe recent IPOs, SPACs, stocks that don't make any money. So in the small caps, they're weaker. Nasdaq under the surface is weaker. But when I look at the actual S&P 500, I do see a lot of strength across the board.
Okay, well, you know, what I'd love to see, Larry, is I'd love to see some of the stocks that are actually on your radar right now, some of the things that you're looking at as we head into year end. But before you do, let me ask you this. Do you subscribe to do you believe in the slightly overweight, very overweight man in the red suit theory coming up?
To a degree.
Okay.
And I'm a believer in seasonality, but I will say this, not so much. I need to see it on the chart in front of me right now, because these are really, we're in uncharted waters coming out of massive QE. The Fed's changed gears. We're in the middle of a pandemic. I mean, these are really uncharted waters. So I am aware that the current 11-day stretch is one of the strongest seasonally. Yeah. But I'm not just going to buy stocks today because of that. I need to see it on the current charts. But I do like the fact that we're in that period. Yes. Okay, great.
Well, you know what I'd love to see from you right now? I'd love to see some of the stocks that you're looking at. Maybe we could take a look at the major indexes and maybe you can break down a little bit on what you're seeing and how you're going to read the market going into the last couple of weeks of the year.
Sure. Okay, perfect. So should we go to a screen share?
Let's do it.
Okay. So we're going to go to share screen and let's see if can you see my screen?
I can, and I see stock charts and I'm looking at Micron.
Okay, so we'll start with the S&P 500. I'm just going to move you over here slightly. So what I see with the S&P and this chart that we've got on the screen, this is the chart. This is the format that I trade off of and look at 16 hours a day. So basically what I see with the S&P, so the first thing, I've got 3 rising moving averages, 50-day, 100-day, 200-day. We can just see the charts moving from the lower left-hand corner to the upper right-hand corner. So all of this tells me that the market overall is in a longer-term uptrend. Now, where we do see some weakness, obviously, S&P just failed, so it couldn't make a recent high. The key range that I'm looking at right now, 4,500 on the low side, 4,700 on the high side. So we're about right in the middle at 4633. So if the S&P starts to trade under 4,500, then this is going to get me even more cautious and more defensive. Right now, I'm cautiously long. So I'm about 70% long. I've got, a lot of positions that are working, but I'm a little bit cautious here just because I understand what's happening under the surface, and the S&P's had a pretty quick drawdown here, but over 4,500, I think we're fine. If the S&P can start to close over 4,500, over 4,700, then that would tell me that this near-term congestion is more than likely resolved, and I would start to lean more into the long side.
Okay.
So that's where I'm at on the S&P. So we'll take a look at the Nasdaq 100, because this is really my focus market. I do a lot with tech. Apple, Microsoft, Tesla, NVIDIA. So Nasdaq 100, same scenario. So just by looking on the chart, 15.4 is where I'd want to see it hold on the low side. Over 16.4 would tell me that this congestion is probably resolved. I'm a little bit more cautious right now on the Nasdaq stocks and the tech stocks, only because I believe that on November 30th, when the Fed publicly changed gears and they said that we're going to accelerate taper, we're going to accelerate the rate hikes. I've been through a lot of these cycles since 1998, which is when I started in the markets. And historically, long duration stocks, so high price to sales, no earnings, these cloud stocks that trade 60, 70 times sales, they've already come down quite a bit, 30, 40, 50%. I think Asana dropped 50% in a 2-week period. To me, that group of stocks has been the weak link. That's, if you take a look at ARKK, it's all the way down, I think 96, it's right near the lows. So when I look at tech and I look at, we'll pull up Apple for a second. And I know Apple can be a polarizing stock. To me, it's just another stock, but it's a very strong stock. So I've got a position in Apple, and what I see in Apple, just by looking at the chart, it's in a longer term uptrend above 4 rising moving averages. It did have a very big breakout move here. So it's recently consolidating, and stocks can't go straight up forever, especially a stock like Apple that's near a $3 trillion market cap. But this type of a chart, this type of an uptrend is the exact type of an uptrend that I want to be involved in. So when I look at a chart like that versus say a chart like ARK Innovation, we can see much different trend, 4 declining moving averages near the lows. Now, with that being said, I did highlight this for my members over the past 2 weeks that ARK right now looks like it's trying to put in some type of a shorter term low, at least for now. And we can see it's holding over 89. It had a high volume week last week. I don't have any interest in this ETF and in that downtrend, but if ARK can hold up, then I think that stocks like Tesla, Nvidia, Roku, some of these very high beta stocks, they could stabilize. And if this group stabilizes, I think it helps out Triple Q overall.
All right. Well, maybe that is going to be the theme going into year end, and maybe the slightly overweight man that carries the gifts might come our way.
You never know. Now I'll tell you what else. We'll take a look at a couple other tech stocks quickly.
Sure.
And then I'll move outside of tech. So Micron Technology, we can see it's breaking out today, but the stocks that I like right here in technology and really everywhere, I like to stay over a rising 50-day moving average. And if I can get over a rising 20-day moving average, that's even better. But we can take a look at Micron. It had a big drawdown, recently reclaimed the 200-day moving average. So over the 200-day really is the first green light for me. And that's really my primary trend filter. So I try to avoid underneath the 200-day. So it cleared over the 200-day, the 20-day crossed the 50-day to the upside. The 50 days turned up, the 100 days turned up, and now it's broken out. It looks like it's at about 8-month highs right now. But here's what I see. Semiconductors overall as a group have been very strong. Historically, in tightening cycles, the market pays more attention to valuation, and it pays more attention to stocks that can generate current earnings. So Micron, based on their report last night, they trade for 7 times forward earnings. So they're profitable. The stock's trying to break out to 8-month highs, and it trades at 7 times forward earnings. So historically, in a tightening cycle, the market pays attention to that. And that's why we can see stocks like Cloudflare, which I think it trades at 40 or 50 times sales. It had a great run, but then they've corrected about 40% or so. But this downtrend, these are the types of downtrends that I want to avoid. And I think this group, while they could have some sharp counter trend bounces, I think that they do face some headwinds, both technically on the charts and if the Fed continues to be more hawkish.
Well, awesome. Well, Larry, I love the way that you break down the markets. I love the way that you break down your charts. And I got to ask you, so if I'm a trader, I'm at home, I'm watching you, how do I find out more about what you do, Larry?
So the best place to find me is Blue Chip Daily. Oh, there we go. BlueChipDaily.com is my web address. They can find out more about me there, the About Us, there's some member benefits. But that's really the best place to find me, or on Twitter. I'm at LMT978. But just a couple other ideas quickly that I wanted to share with you and with your viewers.
Let's go.
Because I'm not just stuck in tech, because there's 10 other sectors. I focus on about 8 of the 11. I don't do much with utilities or staples or REITs. But Alcoa, so I've got Alcoa on our top 25 list this week. Every Sunday, I publish for members my top 25 large cap ideas across the board. And Alcoa, if we take a look at the chart, we can see in the materials sector, which has been a very choppy sector, Alcoa is in a very, very strong uptrend, higher highs, higher lows, rising moving averages, starting to break out today. So I highlighted this for my members on Sunday. Starting to break out today, the 20 days crossing the 50-day to the upside. So when I look at charts like this, now keep in mind, this is in the materials space. If we take a look at, let's say, healthcare, I just started a position about 3 weeks ago in Pfizer, which had a big breakout. It's pulling back today, but it's had a pretty big run. But I'm really seeing, Blake, across the board, very, very strong. We'll just take a look at one more. So Chevron Texaco in the energy space, big breakout recently. It's consolidated, but keep in mind, crude oil in November, crude oil pulled back 26% off the highs. In that same time period, Chevron actually went higher as crude oil pulled back. So when I look at the chart, I'm over 3 rising moving averages, very near breakout levels. I think if there's any stability in crude oil, and crude oil is very volatile based on Omicron news, if there's travel restriction shutdowns, things like that. But I think if there's any strength or rebound in crude oil, then I think a stock like Chevron, which has held up very well as crude oil pulled back, I think Chevron is set up for new highs.
Well, that's awesome, and I love the fact that you venture away even from tech and give us some more ideas. So, sure. Larry, I want to say thank you so much for spending your time with us. And if you guys and gals are watching Larry on YouTube, make sure you give him a thumbs up. Make sure you subscribe to the channel so you don't miss any of our other content. And Larry, you're going to be joining me here on Trader Summit from time to time as a new contributor. So I'm happy to have you here.
Blake, thank you so much. I really appreciate it. I'm happy for the opportunity. I love what you're doing with the website and for the trading community, and I'm really looking forward to it.
Well, thank you very much. And we look forward to having more of you, seeing more of you. Merry Christmas, happy holidays to you and your family, and we'll see you in 2022.
Blake, thank you so much. Merry Christmas and happy holidays to you as well.
All right, bye-bye.
Bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.